noisy lines. Look at supply and demand. It's very difficult a lot of times for a lot of people to see trend in these. And we've suggested before you put regression channels for the value line on the charts if it's a noisy story. And a lot of people say, but what regression channel do I use? Do I use short term or long term? Well, use all of them. Put a regression line for 100, 50, and 20 then, if you want to do it like that. I've got a 20 here, which is the short term regression. I've got a 50 here, and I've got 100 here. So in other words, you're looking at that regression and you're saying, right, okay, so the short term should be selling. The short term is selling. And you can see the short term's coming in on the short sell. You know that the macro is still bullish over the hundreds. You can see obviously where the 50 starts, which would be here. So you're looking at that saying, okay, well, maybe a pull back to 69 might be a possible play. But what if the short term regression goes bid on a downtick? Well, you start buying it into the macro story, don't you? You can start looking at that and saying, I've got an opportunity to buy into the micro story. And when the micro story goes bid in line with the macro story in the background. So these are all things that you can do. Now, the reason why I used one that was green here is so that we don't have too much lines coming in. So I've got the long term in the blue and red, and I've got the short term in the blue and red, and I've got the green in the middle simply to try and stop having too much noise on the screen. And that's exactly why this looks as clean as it does. And the thing is that obviously it allows you the real estate space to keep your other elements on your charts, like skews, for example, or yields. And you're obviously looking at those and saying, right, well, if the oil's going to go sell side here short term, I could have taken a shot at maybe some top edge oil, yields up here by buying some bonds, right? I could have taken a short term pop up here about buying some treasuries and see if I could make some money off that 25, 26 price point. Because obviously if the short term oil is going to be offered, then I know that, well, why not take advantage of that drop off in oil prices and sell into that little top line? In addition to which, of course, if we sold the 50s, if there was a good dealer's key and we saw the supply coming in at 50s and we saw a rejection of 50s, that would make a lot more sense as well. So yeah, I mean, a lot of things we can consider. But it's about trying to get things that you can look at in the short term. Now, we know that there's a short-term sell. We've known there's a short-term sell since the top edge here at 35s. And that's where the regression line comes in powerful, because you already knew that. So if you were long, for example, off the 25s, you would know to get out at 35. If you like the idea of getting short at 35, you would have known that would have been a nice opportunity to play into that buy-side liquidity. If you don't like the oil, you could have taken the buy trade in bonds and tried to play the bond long off of that same downtick phase. So you can see that short-term sell has worked. It's been very nice, 35s down to 10s. And but you can see it's not changed the direction of the longer term yet. The longer term is still bid, and that gives you your macro view in terms of your supply demand and your micro view against that macro view in the background. Anyway, welcome in, guys. These are the kind of things that you want to pay attention to. The simple stuff, again, the simple stuff done well, simple stuff done easily, and what's not to like about it, what's not to like about it. So welcome in. Let's get through today's data and obviously the economic calendar. A little bit on the skinny side because the Americans are usually in some sort of food-induced coma at this time. So we know that there's generally not a lot of activity from those guys at this point today. But as far as the U.S. data is concerned, there's very, very little of note for the US. We have had some overnight activity. You might have noticed the overnight Japanese numbers starting to have quite a big impact on Japan. We had some fairly reasonable Japanese yen movements last night. Moving into the European session, you can see that in the Eurozone, we've had this CPI flash number coming in at 2.7. Nice number there for the central bank to work with. And and other than that, you can see it's quite a naked day today. I mean, there's not an awful lot in here for anybody to really get their grubbies involved with. So yeah, quite a quiet session, I think, all in. Again, a lot of times, a lot of Americans on the desks, they simply just don't play today. They don't turn up at work. and they're back again on Monday. So it should be a quiet day, especially in the afternoon session when it's dominated more by the American session, which isn't going to do much. So unless we get any real sound bites, be cautious, be careful, be aware that we probably aren't going to do much business, and just acknowledge that we've just got to be a little bit more careful. Anyway, we've had some great trades off of dealer keys. We talked about the sell on the Russell at 24.60, and then about half an hour later, we got a great sell at 24.60, traded a low price at 24.55. It was a very, very nice bit of business, and we were obviously chatting about that this morning. I still haven't seen the three buyers that I was looking for on the Russell, so I'm still thinking they may well want to test down towards the next key level, which might well be the buyer that sat there at 53 halves, might well be a target price for the Russell at this point. We also talked about the dealer keys on the S&P in terms of that option information, the 35s and the 25s. The 25 was a strong bid, the 35 a strong offer, and a nice little drop back towards the 25s again here today. So the obvious stuff done well, guys. Just make sure your data's up to date. Make sure your screens are up to date. Make sure you've got all the various elements that you need to know. The NASDAQ, we had some interesting price levels, kind of obvious what we're doing. We're going 80 to 60 to 40 at the moment, judging by the size of the keys. And, looking at these buyers at 60, and then the seller, the buy at 40 should have been pretty obvious. The sell at 60 should have been obvious. And obviously, you're playing now this little tight range here in terms of the NASDAQ. Likewise, with oil, we already had highlighted this trade here. Too many sellers. Pretty obvious the price is going to go north. Too many buyers. It's kind of obvious that they're going to use that to close out their positions for a $1,000 swing. And we always know that $1,000 swings are natural turning points. So when you've seen a big buyer coming in here at 68.40, where do you think the sell's going to come in, guys? Come on, Paul. Where do you think the sell's going to come in? It's not difficult, is it? It's going to be 69.40. So when you see the Voltics arrive at 69.40, having seen a bid at 69.30, 68.40, you're obviously looking at that saying, my God, can it get any easier than that to make $300? No, not really. So a quick $300 sale, boom, money's in the pocket. And remember, after that rejection up there, we already had seen the value narrative on your calendars going offered at 35, which then took you down to the 69.10s for 25 ticks. So lots of good stuff today, lots of easy stuff today. It's usually quite a level heavy day today. And, we're obviously aware of this level here in gold. We talked about it this morning. And it usually is quite dependent on, everything in the afternoon session today is about liquidity grabbing because there is no liquidity elsewhere. And that's why we get bigger moves into areas because they need to get some volume on some of these trades. And if they want to get any trades on, they want to get volume. So they need to keep the price pressing into these areas. And it can be quite sizable at times. A lot of people don't recognize just how big these volume stories can actually get. So I just acknowledge it. Just acknowledge that you're probably going to be trading off keys a lot today if you're going to trade at all. And, don't get yourself upset by the fact that they're probably going to run sweeps very, very often into price levels. And because that's what they need to do to get any type of liquidity on their books today is to run stops, highs and lows, to squeeze every last little order out of the book. And it just makes life that little bit more exciting for us as traders. And just be aware of it. Get ready to play it yourself. Make sure you've got your levels on your charts properly. I've just taken a short sell there quickly on the NASDAQ off the 864s. Trading 861s just now. I'm getting my stops now at break even. I've got enough space on this to make a stop at break even, worst case. And that'll do. That'll do. It's a similar trade to the one we took earlier off the 874s and into the bottom edge. A reasonable profit there down to the 840s for 30 points. So I'm quite happy with that. Yep, stops at break even on that NASDAQ now for me. It's not the most earth-shattering trade, I don't think. Obviously, the NASDAQ's going to be a bit skinny today as well. Anyway, welcome in, guys. I'm going to grab some lunch. There's not a lot to get through today because it is going to be very much holiday volumes for the afternoon session, but welcome in regardless. and I'll be back shortly.